Well, hello, traders and investors. I'm L.A. Little, and this is your daily Neoclassical TA wrap, where we take a look at these markets on a daily basis and ask ourselves what happened today and what does it tell us about the coming days. We got a new skin here on the site. We've did an upgrade this weekend. I think you'll find it a lot easier to traverse. There's stuff for visitors, of course. Certainly more things for members. We're creating a community of like-minded traders and investors, and we're supporting them with tools, with neoclassical education, and with guidance. And that's through our portfolio and, of course, through our chat rooms and other mechanisms that we have to support the community base. We are looking to maybe open this up again here pretty soon. We're not quite ready, but we're getting close. I would advise you to come over, take a look at what's here, flip through some of these charts, some of these various charts that are out here, see what we're doing, how we're doing it, how you might want to participate. And if you do want to participate, and you get to that point, just come to the membership, and there's a process here. You can look at the process, hit the Get Started button. You have to fill out an application. Again, we're not open yet for business. But that will be coming. It's going to be first come, first serve, and we're not going to take everybody. We're going to take a few at a time because it's going to be an intensive get you up and running, hit the ground running so that you're productive right from the beginning. Teach you what's on the site, how to use the tools, things of that nature, intensive. And because of that, we want people that are going to stick with us and are probably going to succeed. And so we're going to vet those people that fill out applications. So if you want to fill out an application, again, come to membership, hit the Get Started button, and then you can fill out the application. As far as these markets, of course, we're closed for the holiday, extended holiday today, so we don't have numbers, but I am going to show you a few things about what I think is about to happen. So let me pull up the charts here, tools, go to where's my watch list, and then pull up my indexes, and from there we can get started. So let's start with the S&P 500. So if we look at the S&P 500, and we're looking at it here on daily to start with, you got this consolidation that's taking place, right? And that makes sense. I mean, you had this huge run. That run not quite done in terms of the ABCD structures, but essentially you went from here to there, right? A little pullback, and now another ABCD structure takes you about 2.5% higher. Whether it just goes straight up there and hits it, or you get more consolidation and then eventually go hit it, or maybe even you get a little bit of a pullback and then go hit it. It's not clear which one it's going to be, and anybody's going to tell you that, oh, it's absolutely going to be this or that. That's a bunch of nonsense. I mean, a market can consolidate and then go, right? It doesn't have to pull back. I mean, it can just go across and work it off that way. And that's kind of what it's doing. And I would expect the rest of this week is probably going to be that. You're probably going to look out here at the end of the week and you're going to be in the same range. And then it's going to be up to the first of the year, right, when people come back to work and want to start to reallocate however they're going to allocate. That's when you'll get the movements. But, for someone to come in and say, and I've seen a bunch of pieces, there's always predictions this time of the year. People come in and say, oh, it's absolutely going to do this, or going to go straight up, or whatever it is. It's nonsense. What we do know is from what we see, more than likely we're going to resolve to the upside. It's just a question of when and how. And so when we come into the new year, the question is it going to make that break, pop up there, go finish off that ABCD structure, right? The B point to the C to the D of that ABCD structure up here about 2% higher? Or are we going to mill around and then eventually go up there and do it? One way or the other, we're probably going to get up there, and we're potentially going to go up even higher than that before it's all said and done. Let me call your attention to something we don't talk about all that much, but is always a factor, and that's the MTTF structure. If you look at it here, 56.5 on the short-term time frame on the S&P 500, right? And so we're on the S&P. that means we can go, 2-3 more weeks here before we kind of get really extended. And if you go out to the intermediate, you can get out to, May, April at least before that one gets extended. Now we're way beyond extended on all the time frames, right, in terms of long-term stuff. And that's, of course, because we've got the Fed manufacturing a continued, run higher, and not just the Fed, but central bankers around the world. It's unprecedented what we're doing. We've had these kind of runs before. I think this is the second longest run in history now in terms of a long-term time frame. They come, they go. As long as it's here, you got to play it, and that's that's what we're doing. That's what we have been doing. That's what I've called for all year. I kept saying, if you were watching this show, and if I pull over the weekly chart, that from a neoclassical perspective, this thing was going to resolve to the upside. Let's go back and review that because it's important. You still have it on the charts here. We keep 60 bars on a weekly chart. You had a swing point high over here. You had one right here. Right? That's two swing point highs nested together that both were broken on that big move up off the June Brexit. Right? That was the breakout there. What do? They go across. Neither one of them test, or actually this one does not test until we get to here. And that was that pullback in front of the let me see what the date was on that one. That was October 31st, actually. That was the pullback just in front of the election. What is that, though, neoclassically? That is a retest, regenerate off of the prior swing point highs after more than 6 bars. Anytime you see that, right, the probabilities are extremely high, more than 6 bars, right, greater than that. The probabilities are very high that you're going to get at least a bounce, if not a regeneration in the direction of the trend. What's the trend? It's up. And what do we get? Regeneration to the upside. I kept saying back here, people were all worried about everything this whole period, right? There's a good 2 months there. I kept saying we're going to resolve to the upside. Somehow, some way, we're going to resolve the upside. And that's exactly what took place. And now we have a situation where we've had another huge run. But I want you to, again, when we talk about huge runs, let's go back. Now mind you, then I'll try to point it out here. This little push up and roll over here isn't nearly the size of this one in there, right? But now that you've got this run, right, when is it going to roll? That's always the question, right? Where's the next roll going to come from? Is it here? Is it up here somewhere? You don't know that. It's not unprecedented for it to go that far. Take the percentage gain from this price point to that one. That's a straight up move. What's the price point down here? 1810, the top, 21. So you did roughly 300 points on an 18 base. That's 16%, I think, right? Now we're going from, in this case, 2083, and we made a high here at 2277. So we've only gone 200 so far. That's roughly 10%. We could go another 5 or 6%, right? Just to match what you see here on your charts. So, you don't want to try to guess where your tops are, right? You don't have anything here yet to tell you that you have a top. Yeah, it's kind of struggling up here. Yeah, it's kind of going sideways, and you see that, of course, more so when you look at the dailies, but that doesn't tell us it's a top yet. We don't have anything to tell us that. Matter of fact, this could easily just be a little consolidation, right? Work off some of this excess before you make one more spurt up. You actually have nested ABCD structures now. Right? We were just looking at this. You have this one that we've already talked about, but now because of what's happened here, you have another one in here. So you have nested ABCD structures that can take you higher. You could even pull back deeper into here and still have that structure, right? And have it come out at about the same price point. So we could get a pullback into that big bar we've talked about. Again, any of those events could happen. And I'm not going to sit here and tell you I know which one's going to happen. But I can tell you that this market's going to resolve to the upside again. It's what I've said before. It's true here. It's not done. You know, whether we get a pullback or not is a different question. What you have to do, knowing neoclassically what's probably going to happen, the fact that you have this big bar, you're going to, if you test into it, you're going to test into this area. As a matter of fact, what we should do is pull up the Russell, because the Russell is the one that's really given us more of the clue that this is going to push higher from these higher price points. And that's because this is that same bullish retest regen, just like we saw in the S&P 500 on the weeklies. Well, this is that same sort of setup here. Now, it's on a daily, so it's not quite as powerful, but it's the same setup, because after you broke out on this bar, the green arrow that you see here, right, after you broke out there, you go more than 6 bars again, right? So when it finally finds a way to come back into here, which it still hasn't done, it's probably going to at least bounce, if not regenerate to the top side. Probabilities are extremely high. And so when you look at it from that perspective, you don't want to try to guess where the top is. You just want to stick with what's working, knowing that the wind is at your back. That's what Neoclassical is about. Find out where the wind is, which way the wind is blowing, and get in that direction, right? For the most part, yeah, you can trade around it if you want, but you know, if you know which way the wind is blowing and you know how forceful the gale is, then why do you want to fight it, folks? Don't fight it. Just go with it. So if we look here, then now the IWM, the Russell, is the more extended one. This one's at 68. And if we think about that in terms of how much farther it can go, actually, if I look at that again, I see 60. That's 60, not 68. Eyes are getting old, folks. So 60, yeah, they can go another 2 weeks easy, right? So if we think about that, you know, maybe we consolidate, maybe we poke higher. Now, what does it mean for that MTTF to change, right? What would it mean for this trend to transition? To transition trend, you have to break a swing point. We got a swing point right there. So we could actually get under here. That would take and reset this to a sideways move, right? So this would end up being sideways. And then, you know, so if you think about it, you're up, now you go sideways. There's nothing to keep you from going back up again. As a matter of fact, what we just talked about, the odds are high that that's probably what would happen. So whether we get the pullback now or we get to push up and get the pullback, either of those work. It just depends on how long you want to be and how much pain you want to suffer, right? You know, I mean, we're not talking about very many points here, but if it does what it should, you shouldn't see more than a couple percent pullback. Can you deal with that? Well, if so, then don't worry about it. Or maybe lighten up a little bit and try to buy more down there if it doesn't. It's, you know, that's all a trading plan when you get to that. So that's where the markets are. I wanted to give you a good feel for where things are, how to position. You know, everything's going to happen next week. Nothing's going to happen this week. You're going to try to drift, trying to push higher. You're going to end up the week probably somewhere in this top range, maybe towards the top of the top range. And then you're going to come in Monday and, you know, everything's going to happen. People are going to reposition. Maybe they're going to do tax selling, whatever they're going to do. You know, or not tax selling, but take profits. You know, because they didn't sell. You know, they want to pull their taxes into this year because there should be lower on non-capital gains. And so all that, right? So whatever that's going to be and whatever the demand is going to be, it's going to happen after the first of the year. You just want to position, stay long, position so that you can get longer if you need to, and potentially take some profits if it runs up there and hits those targets. That's it for tonight. And I will be back tomorrow, and we'll see what the market wants to do in this slow trading week. Have a great one. Bye.